Good day, trader. Stacey Burke from Stacey Burke Trading. Today we're talking about do not counter-trend level 3 trades. So, question I received, which is very important to understand, trader traded against a level 3 trade the other day looking for the reversal when in fact the trade was actually in process and moving strongly and they were stopped out. And so obviously they missed the original move. Now we talked about level 3 trades. I've talked about the 100 pip boxes. I'm going to review that. We'll review the timings again. Asia, 8 to 11 p.m. Please just Google it. Don't ask me what time zone you're in, what time it is. Just Google it. 8 to 11 p.m. London 2 to 5 a.m. I know that London hasn't changed yet. I stick with my time window. I haven't changed anything because I work from the high and the low of the day. So if it moves an hour later, whatever, I'm probably not sitting around anyways, but just Google it, New York Eastern Standard Time. And New York, 8 to 11 a.m., New York Eastern Standard Time. Equity markets, 3 a.m. for London, 9:30 a.m. for New York. Question, why do I have 2 o'clock on there and everything else? This 3-hour window sets the high and the low. If we open up inside of a high and a low, I'm either looking for the reversal trade. If I'm not in a pump and dump, I may get in the pump and dump and look for a reversal trade, or there may be already the pump and dump maybe at the higher low of the day. Again, coming back to what is your playbook setups. I'm not there to try and catch a move. I'm there to trade my setups if they present on some of the instruments. So again, it's critical to not just show up and try to pick the direction and then wonder why you get chopped up or you get caught in a false move. So critical to understand the timings. High and low of the day, is the higher or low already possibly locked in? That comes back to peak formations, understanding the 3-day setups. We saw a lot of reversals yesterday. High of the week, high of the month on a few pairs. Squeeze on gold inside of the peak formation low from Tuesday. Again, a 3-day setup. But even within these trades, once they're moving and you allow them to continue their move until there's consolidation, usually at the end of that 3-hour window or into the gap time, then the market will either offer you an opportunity for a reversal or a continuation trade, which we'll talk about today. Time compression, all these other things, you need to go back and study the videos. Don't Google, like I've received a ton of emails asking me questions that are very much explained in the videos. Please go and Google it inside of the videos. Everything's explained. Time compression, I know there's still some questions about that. Just understand this. At the end of a 15-minute bar, the market can be changing directions. And if you're trying to figure that out on the price, you're missing out one of the key indicators. Listen closely. One of the key indicators is the time of day. The time of day for moves to end, for new moves to begin. The price will be showing you that on the chart. But if you're inside, you might be getting confused. You're using indicators, all these different things. Pay attention to the clock. Once a level 3 trade has come out of consolidation, do not counter trend this move. It is not going to reverse. It will not reverse in most cases until it goes into consolidation, whether that's in the gap time at the end of the 3-hour window. The exception being if it's coming out of news and it's in a trading range or it goes vertical, it'll typically run vertical for maybe an hour and then possibly maybe putting in a low or a high. But again, understanding you will be at the higher low of the week typically when these reversals happen, if they're going to reverse quicker than that. But understand that if they've come out of consolidation, chances are they are not going to stop until the end of that 3-hour window or come towards its level 3 on the other side, which is the end of that move. These moves will tend to continue. Traders will counter trend them, and in often cases they're trying to scalp against a large move, and they may get caught and they may get smashed. It depends on which market you're trading. I can tell you with absolute certainty that if you counter trend a strongly moving market, that these markets will put in pump and dumps inside of those strong moves, which will typically be a 15-minute reversal against a trend. And you might be up some pips, but it'll roll over very quickly and spike through your position. So 3 types of moves. Trend trades. We talked about this. 3 things that markets do. Trend trades, continuation. So you might get a continuation reentry, which is perfectly fine. Again, it could be a pump and dump or a dump and pump against the trend for 15 minutes. You'll get a continuation trade. There'll be false break reversals at the highs and lows of the day. So you may get a big move in London, for example, and they may revisit that at the beginning of the U.S. for a reversal trade, coming out of a peak formation, consolidation at the high or at the low, retesting that, and then reversing. Sorry if there's a bit of background noise here. I've got the gardener working right outside my window here, so my apologies. But you may also be in a trading range, which again is a large consolidation. So typically you won't see a level 3 trade come out of a trading range because it's going back and forth. Level 3 is once the market has gone sideways into consolidation. That consolidation can last hours. It can last anything from an hour to 2 to 12 to 16 hours. Again, you could have a 3-day setup that consolidates for several hours into the next day at the high or at the low. So again, wait for the market to consolidate in between next session to form your hypothesis heading into the next session. The weekly template will help you to determine your thesis. So again, you could be at the high of the week, the low of the week, the high of the day, the low of the day, the high of the session, the low of the session. The move that brought you there may be a false break. Now, if you're counter trending a breakout of a consolidation and you're looking for the reversal, again, you will get smashed because you may be in a longer time frame level 3 consolidation, i.e. the beginning or end of a month. The 2 weeks, we've showed several examples of 3-day setups coming at the low of a month right into the beginning of a new month. And again, you can look at some of the major pairs. We've had 3 weeks of rise right out of the beginning of the month. On the major pairs, I'm going to explain this one more time. I keep getting this question, well, how do you know you're on level 3? It's really simple. You're in a 100-pip box. 0 to 25 is level 1. 25 to 50 is level 2. 50 to 75 is level 3. And 75 to 100 is obviously above level 3. So anything between 75 and 100, if I'm looking to short it, is level 3. Anything below 25 and double zeros is level 1. Now, if I'm looking to go if something's fallen, then 3 levels down is 25. It goes from 100 to 75, 75 to 50, 50 to 25. And then I'm looking for a potential consolidation or reversal for the long trade. And again, that could be back into peak formations. This comes back to understanding the template and everything else. So if you counter trend a move prior to this market going into consolidation, you will get smashed. Higher volatility pairs can be 100-pip boxes, so study every single instrument before you trade it. Obviously, I'm referring to gold, NASDAQ, oil, other pairs, other indexes, commodities. Again, study them before you trade them. On any given day, a pair may move in 50-pip increments, so a strongly trending day could go 150 pips in 50, 50, and 50. So again, do not counter trend the move until we have a consolidation, which typically will be near the end of the 3-hour window or in the gap time. Once a move develops, especially in the equity hour, this move can continue for 3 hours or more, which again comes back to understanding that we may have a 1, 2, 3 on an hourly chart. So do not counter trend those moves. If in doubt, stay out. Do not counter trend a level 3 day, a level 3 week, a 3-session level 3, which is a high day, low day trade. So those reversals can continue and go back to the entire distance of the full day. Let's take a look at the charts. You can go back and review all your charts. I'm only going to go over a few charts. I'm just trying to hammer home the concept of do not counter trend the level 3 trade, but I could spend an hour and a half going through charts. So I'm just going to run through some quick examples. Again, gap time, we see the consolidation between 50 and 75. Monday, Tuesday, and the move coming out of the level 3 out of 75 into the Europe-London window. Falls into the next double zero box. They put in a peak formation low between 25 and 50, again level 3, and they come back up to the top of the 100-pip box. Initially, first break down from level 3, they come back, New York Open, and fall another 150 pips. So again, traders are down here looking for the reversal and that sort of thing. It's come out of level 3. Do not counter trend this move. I know that seems obvious when you look at the charts in retrospect, but again, understanding the criticalness of timings. This is not hindsight. If you go back and you review this and you pay attention to the clock and you pay attention to the numbers and the high and low of the day, you will understand this concept. And again, if you're trying to trade every move, you're going to get yourself into trouble. Pick some strategies, pick some setups, focus on your highest probability setups, and then stick with that. So we see a strong move out of the Asian peak formation low yesterday. Again, this comes out of 25. So we didn't come from a level 3 trade up top, but it's dropped down 3 levels into the quarter level, into a peak formation low, and continued to break out and trade. Now, breakout traders on the daily chart, again, go look at your daily chart, 4 hour, 1 hour, whatever, there was a gap here that hadn't been filled on the breakout trader. This market continues to fall from 75 to 50, 50 to 25, comes down in level 1, gets traders trying to go long, boom, smashes them. So knowing that there are stops sitting on the breakout trade, the previous day's high that broke out yesterday, needed to get hit at break even, stopped out, whatever that may be. So now we've possibly are forming a peak formation low. No idea. But level 3, do not counter trend a level 3 trade. Again, a massive move this morning on oil. We had a 25 pip extension prior to the end of the night, and then they've dropped it down 1 level, 2 levels, into a 3rd level, and then down to the double zero. So they've pinned down to double zeros and made a peak formation low. Is that the low? I don't know. But then they've traded back into that and potentially locked it in as the low of the day. So they've gone down to the bottom of the 100 pip box and come into level 1. Breakout, pullback, creeper down. Right before the market opens, we get the reversal for the trend trade. So notice the difference. Go back and watch yesterday's video on the pump and dumps. A completely different setup. There is no pump and dump, but we have 3 levels of drop. We have a creeping trend down. Remember, I talked about all these lower highs being fuel for an explosive move. And we see oil do a vertical move. First bounce trade, we haven't talked about that. First bounce trade, then they enter into the next 100 pip box. Do not counter trend a level 3 trade. This market comes down into level 1. So again, level 1 is the same as level 3, but for longs. So we're 3 levels down, they lock in the low, they break out, they pull back into the first level. For the long trade, they go vertical, 100, 100, they go into the third 100 pip box and reverse. Well, Stacey said it should go 300 pips. No, it will go into the third level. I don't know what it's going to do, but it puts in a high. Goes into consolidation between 50 and 75. Isn't that interesting? A 75 pip consolidation at the high of the day. It retests the high before breaking down and pulling back. This breakdown and pullback is an opportunity for the short on the pump and dump into the peak formation. So traders are saying, well, how do you know that this is the retest into the high after 3 levels of rise. It breaks down first, pulls back. There's the engulfment for the short trade if you were looking for the reversal. I always wait for the breakdown and the confirmation. I never try to get in at the high or the low. That is a sure recipe for disaster. But what goes up must come down. Again, an example of 3 levels of rise, consolidation, and the reversal. So if this reverses out of level 3, do not counter trend the level 3 trade. Hopefully you got value from today's video, traders. Look at your own charts, study them, understand this though. If a trade comes out of level 3, do not counter trend it until it goes into consolidation and you have that opportunity. And again, just remembering, you want to see volume trapped up high. That's going to get caught up high for the sell trade, or you want to see volume get caught down low. If I can draw this box for the reversal, and also traders who are chasing these creeping trends for vertical explosive moves. Have a great trading session. Keep it simple. Stay disciplined. Stay focused. Keep getting better, and may the markets
Hi
go.
traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments, As always, traders, stay disciplined and may the markets go with you.